What's up, investors? Welcome back to the Investors Club. Today we're going to take a look at a stock I have in my Robinhood Dividend Growth Portfolio, and then after that we will give a quick update on my portfolio as a whole. This stock I'm going to be looking at today is ticker symbol PBA, and that stands for Pembina Pipeline Corp. Pembina is a company stationed in Alberta, Canada, and it deals with transportation and midstream services of crude oil and natural gases. It also engages in storage, marketing, and delivery of crude oil and natural gas. I actually found this stock through an article on Seeking Alpha, so I'd like to go through that article and give some points as to why I piqued my interest with this stock. So we'll go over to the article, and I'll show you guys what I kind of like about this stock. The first thing I read was whoever wrote this, Brad Thomas, I think was the guy who wrote this, but he said, whenever I include the word retirement as some derivation in an article, I'm reminded it must pass my mother's sleep well at night or swan test, which I kind of thought was cool. So he goes on to talk about how his mom's retired and how he's showing her the stock, but it says, like most midstreams, Pembina has been smashed by the pandemic and the worst oil crash in human history. It has fallen about 25% in the last couple of weeks. Alliance Bernstein thinks it's because of tax loss selling, rising political uncertainty in the U.S., and a generally bearish market. And he goes on to say that these declines can create exceptional opportunities with long-term returns to make grown men weep with joy. So I'm hoping that's what Pembina does for me. It's got almost a 9% monthly yield, and yes, it does pay monthly on its dividends, which is kind of surprising. I was actually kind of surprised at that. It shows their dividend king safety model, so what they look at when they're looking at dividends. So they cover the payout ratio, debt to EBITDA versus safe level for industry, interest coverage ratio versus the industry, debt versus capital versus the industry, current ratio, quick ratio, the S&P credit, Fitch credit, Moody credit, and so on. They also look at the dividend cut risk in the recession and the dividend cut risk in the normal recession. Shows their safety scores. And here's why PBA has a 5 out of 5 dividend safety. So there's about a 1.5% of a dividend cut in this pandemic. It shows that the debt to capital is 38% versus 60%. Debt to earnings before interest, taxes, depreciation, and amortization is 4 versus 5. Interest coverage is 4.8 versus 2.5 plus is considered safe. S&P credit rating, the BBB stable outlook, has a 7.5% chance of 30-year bankruptcy. The F score is 4 out of 9, which 4 is safe and 7 plus is very safe, which means there's a low short-term bankruptcy risk. The M score and the dividend growth streak, 8 years of dividend growth and 23 years without a cut. So that's pretty nice. Pembina's balance sheet has low leverage for this industry and plans to keep it that way. Here's how Canadian Imperial Bank of Commerce describes it. A best-in-class midstream company, Pembina offers investors a solid growth profile, low leverage, and an inventory of high-quality assets. The company bolsters sound credit and leverage metrics with a long-term target debt to EBITDA ratio of 3.75 to 4.25. The company's revenue stream is highly contracted, and 50% of the fractional spread has been hedged. So what that means is these contracts, they're already going to get paid for those, undoubtedly. So that's 50% of their income right there. It also, I guess, it acquired some Kinder Morgan Canada, which helps them capture synergies in its profile of offerings. This is some other stuff. This is what the S&P said. A stable outlook reflects our view that Pembina will continue to maintain FFO to debt of about 16-17%, as well as a high proportion of fee-based or take-or-pay type contracts, which will constitute more than 85% of cash flow. So these contracts are going to take up about 85% of their cash flow, which when it's contracted, you're guaranteed that money. So that's just makes cash flow that much simpler. Then it goes on to talk about the management. The CEO, Michael Dilger, has been in the business for 25 years. I think he's been at Pembina since 2014. No, 2005, excuse me. He's been the CEO or president since 2014. Here's what Michael Dozier said about the Q2 conference call. Pembina's business continues to operate safely and reliably throughout the pandemic, ensuring uninterrupted service to our customers. We also continued projects in flight to ensure customers have the services they needed. Second is our commitment to financial guardrails. Our strong contractual underpinning fee-based take-or-pay revenue streams, prudent dividend payout, commitment to a BBB credit rating, and focus on working with solid counterparties. Our top customers, many of which have just reported their own Q2 results, are performing well under the circumstances. Although higher prices are likely needed to incent significant growth in the basin, many are generating free cash flow after dividends. Overall, the company expects to end the year in a solid financial position, ready to tackle 21 with its dividend in place. So with that article, that's how I found this stock. I really liked it. It's a good price. I think I bought it for $22.12. Yeah, I've lost a little money already on it, but I'm not worried at all. So I'm going to show you. Here's the 1 year graph. It's at $40 at the peak, and the bottom it was at 11. I bought it the other day at about $22.12. As we can see, earnings per share $1.55. PE is 1660, which is very nice. Dividend range $1.89. Yield 8%. Market cap $11 billion. Today the volume was up a little bit, but I'm just kind of surprised the other day it wasn't. Let's take a look at the dividends. Okay, so as I said, 8%, $1.89. 5-year growth rate 2.85. I'd like to see that a little bigger, but dividend growth for the last 4 years. And this is 15 cents, but that is paid, as it says, monthly. Dividend safety, I don't have. See, I have to subscribe to Seeking Alpha to see all this, or pay for it. And but I think you can get a lot done without it. Let's see. Let's look at the growth. Okay. Revenue growth year over year. Obviously, this year it's down 15%. Down 15% in year over year. Revenue growth going forward. It's down a little bit. But as I said, I'm not subscribed, so I don't get to look at all these things. Here's the dividend growth year over year, 6.96%. Going forward, 4.6. Looking pretty good. Let's see what ratings they have, if I can see any ratings. Yep. I figured maybe I should just get premium so I can actually look at this stuff, huh? But anyways, that's Pembina. That's what I wanted to talk about. Pretty good stock. I'm not telling anybody to buy this. I'm no advisor. I just thought I'd put it out there because I thought it was a really good deal with a nice dividend yield. I don't believe it's a dividend trap, because the only reason why it's at 8% now is because it's priced at $21.30 right now. So that's the reason why it's at an 8.76. If it was at 40, it'd be around that 4.5% range. So I think it's a good stock to look into. Do your own research. But full disclosure, I do own 56 shares. And with that, we will look into portfolio for today. So today was actually a pretty good day. We were up $75 total and $36 after hours. If it'll show my graph. There's an error. Well, I guess we won't look at it. But so today we started off pretty good. Took off in the market open. Hit 946, so almost got back to our 13,000. But around 1 o'clock, I don't know exactly what happened. I haven't done any research, but it kind of fell off. I did notice that Pembina actually dropped about then. Actually, most stocks did. So I don't know what exactly happened, but just wanted to give a little update and show you guys how we've done over the last week, and check out the last month here just for fun. Yeah. Still down on the month, about $700. Check out the 3 month. Pretty good. 300 up in the past 3 months, 2%. Not bad. But anyways, guys, I just wanted to talk about Pembina. So if you got anything good out of this video, go ahead and like and subscribe. And appreciate anybody that's viewed. I did notice that I did get a subscriber off my last video. So if that's you and you're seeing this, I really appreciate it. So like I said, give it a like. Helps me out. Helps out with the YouTube algorithm. And we'll see you guys later.